Hey, welcome to Dow Stock Talk. I'm super excited today because I'll be doing my first collab with another YouTuber who also have an investing channel. So stay tuned. Hey, this is a video. I'm actually doing a collab with Keith. His channel name is Think Stocks, and I'm really excited, and I want you guys to definitely check out his channel as well and like it. And we're going to just be having a general conversation about investing in general. So let's jump in.
All right, how's it going, Amen?
It's going pretty good, in yourself.
It's going pretty well. I mean, it's Sunday. Apple's going to do the stock split in August 31st. A bunch of new investors going to jump on with hype, and it's going to go up. And my share is going to be pretty well. I might actually sell after that because, you buy the rumor, you sell the news. But that's why we are here, to talk about that and try to educate investors not making dumb mistakes when they first start.
Right. Talk about the Apple split. I like the video that you did where you a lot of people end up thinking, as far as the split, the stock is actually getting cheaper. You think about it cutting the pie a little bit smaller, but the pizza size, it's still the same. But the reason why I do think the price will go up, I think it will go up more so the confusion, because simply visually, because they're seeing 100, a lot of people think, oh, it's much cheaper, like this is a great opportunity. And I definitely think if you were an existing investor, you would benefit from it. People really knew or understood like what was actually going on, it probably wouldn't make much of a difference, especially with the whole fractional shares as well. I would be buying the fractional shares now because anticipating once they see the 100, the baby boomer age, they're not really familiar with that, so this will be when they'll probably end up buying, and the share price should end up going up to finally buy a whole Apple share.
But yeah, exactly. It's all the fundamentals, and like what I said in my last video, the fundamentals are exactly the same. None of that is changing. It's just cheaper, and like you said, it's like buying a fraction of a share if you're on, say, Robinhood or M1 Finance. People definitely won't understand that. They'll just want to jump on the bandwagon and be like, oh my God, it's now in the news more. Let me buy some. It's only $100. So all the retail traders will jump in and do that. But let's talk about the stock you don't like, and I'm also not the biggest fan of it, and that is Tesla, the biggest hype stock of 2020. And I mean, we have a lot to talk about with Tesla. And for all you new investors, here's something that you really want to look at. You don't want to fall for these mistakes where you buy into these hype stocks, especially because their fundamentals make no sense right now. And I mean, Amen, what about what you were talking about?
Me, like, here's my thing with Tesla. I mean, it's a very interesting situation because I was brought up most of the thing when I first got into investing. I was familiar with value investing, like where I end up getting most of my knowledge and strategy from. So me personally, when looking at Tesla I know Tesla's a growth stock, but typically the best way I know how to, I guess, assess a company would be based off of fundamentals, which does not align with Tesla at all. So that's why my decision from a risk management of selling Tesla, I had it, I think when I bought it was a while ago, it's like $200. I went to H&R Block, and it's a funny story, and she was like, you're selling Tesla? And I was like, yeah. She was like, why would you sell Tesla? And my sole reason, it was because they're not profitable. I want to make it a gamble because besides of what I personally think, I really had no hardcore evidence of, okay, why I'm sticking with Tesla. I think my logic, based off of what I was going about my teachings and stuff, with that, I think that was a smart play. However, sometimes that, like, back knowing what I know now, it's just unfortunate. It's kind of like I got penalized for going to the fundamentals. And then the stock price did go up, and I probably went back to her. She was like, see, I told you. But looking at it from making sound decisions, I definitely think it was still the right way to go. However, sometimes chance is better than, I guess, strategies at times.
Exactly. And I remember what you were saying before when we're on the phone. right now is such a crazy time. Everyone jumped on in March.
Yeah.
All these new investors jumped on. It doesn't matter what you bought into. You bought into the cruise line stocks, you bought into Tesla, banks, Target. It doesn't matter. It's skyrocketed. The market recovered and went up 40%. That doesn't normally happen. So all these new investors are thinking, this is great. I just put $1,000 in. Now I have $1,400. Like, or if you had a lucky investor like my cousin, she bought 9 shares worth of Tesla at $900. So she feels on top of the world. She's smart. She's very smart. She's been investing for about a year and a half. So she understands the market goes up and down. But like you were saying, for all the new investors out there who just started and thinks this is easy money, it's not. Because if you started in January instead of March, you would have saw your portfolio drop 30%. You wouldn't have felt too good. You may have sold by then. I, on the other hand, didn't. I thought, all right, it's discount season. Let's jump into this.
Yeah. And I wanted to bring that up about the whole pandemic. So my actual approach was, I was playing very conservative. I was just kind of sitting on the sidelines. So of course I didn't sell. Well, actually I did. I ended up selling bonds. But the reason why I was selling bonds, because the yields that you were getting was relatively low. And to me, bond prices was falling relatively more substantial than it usually would. So I would say, like, if that's the case, I'd rather have it in cash and then put more aggressively in stock, especially when you're looking at the yield. Bonds to me is relatively expensive, and then you have a lot of the corporate bonds and stuff. It may be a concern that they might possibly can't pay it off, and it just, with the interest rates, it was just not like my whole cup of tea. So I initially was just on the sidelines. I haven't really made any trades at all. Entry point would have been when the S&P 500. I was hoping that I could see the P over E ratio get to 15. So because that would have been about the average. So that's when I would want to jump in. So even if it fell further than that, that would still be a good price, because I'm still looking at the long-term perspective. And I think at that point, that's when validations will paste off of historics. I felt like that would have been a good entry point. However, I think the Feds, the Feds spoiled that. One thing I do regret, because I tried to play a little bit aggressive. Normally, I consistently just, regardless, just put in a couple $100. This particular time, I was going to take a risk, so I stopped it. Normally, I never stop that. I stopped it, and then I was going to, once it got to that 15, I was going to double down, and I was going to bet big. But, that opportunity never came, but it's part of investing. You weigh your options,
Yeah, and it reminds me, I just remember, March hit, we were down like crazy. I think it was the 3rd worst day in all of history. There's only 2 days that topped it. That was 1987 and sometime in 1929, right before the Great Depression.
Yeah.
And it hiked back up. Everyone was like, we're not going to see a V-shaped recovery. Wait a couple of months. It's going to drop. But luckily, that's when I really honed in on dollar cost averaging. Like, I don't care what the market's going to do. Every Tuesday, I'm going to buy more shares of my positions. Why Tuesday? It doesn't matter. I'm just sticking to a plan every single Tuesday. And thank God I did.
Yeah.
Because it never went back down. It still could.
Yeah.
It could still go back down in September, or it could be like back in 2018, where we had just a disgusting October, and then December was even worse. If that happens, I'd be okay with that, because you and me, we're in it for the long haul. We're not trying to make a quick buck. We're both young. We're looking 20, 30 years out. So we don't care if it drops. If it drops, great. Where can I get more money to put it into the market?
Just speaking about that, I think that at dollar cost average, going with, just the regular index, I think you can never go wrong with that. It's very simple, straightforward, but if you was just historically looking at those numbers, whenever you can get a return that's better than most professional hedge funds over a long period of time, just the general index. A lot of times, sometimes the more things you try to do, you may end up be hurting yourself, especially when it's a time where it's a whole bunch of uncertainty, because that's, even with the most logical people, that's when your emotions get the best of it. And it happens with people are experienced or not. So, that's something I just wanted to bring up about that.
Yeah.
Yeah, and now last topic, we're going to talk about where we think the market is heading, future opportunities that we think in our current play. So I don't know if you want to start off? Keith?
Yeah, so I'll start off because I know you're a value investor. I'd say I'm more of, I don't know what I'd call myself. I really like how Charlie Munger and Warren Buffett, they only have a handful of stocks. You could call them value investors, but at the same time, they're like a concentration investor. They don't like to diversify, and I kind of stuck with that. I have 14 stocks. That's all I'm invested in. And I just keep putting money into those 14 stocks. It's industries that I know, it's companies that I know really well and use. And for the outlook, all of them could plummet over the next couple of months. 2021 could be really rough. I just can't survive much longer. So they may have to close up shop, and that's just going to drag the economy even more. For 2021, and even just to finish off 2020, I think it's going to be really interesting. I have no clue. It's not going to change my plan at all. Dollar cost averaging, I'll be buying every single Tuesday. But what are your thoughts? Because I don't even care if it goes up or down. I'm still going to be buying my companies because I love them.
Yeah, so I'm probably going to take a pretty interesting and started creating a journal. So like as time goes on, my current standpoint, so I can have my logic and I can go back. And actually it was pretty helpful because before I thought I was trying to time the bottoms, like why am I trying to time the market? But I actually did have a strategy in play. It just didn't get to that point. I'm still a value investor, but right now, to me, since the fundamentals is not even being even considered at this time, I think I'm gonna have an interesting play because I'm recently been getting into swing trading, and I do think in the next couple of opportunities there'll be a lot of great opportunities for huge gains, but I don't think they're going to sit. I don't think they're going to hold. So from a long-term perspective, I need these gains to hold. So what I was hoping is of course, the dollar cost average in the regular general S&P 500, that will end up, being the same. That's as far as the cash. I'll probably end up going with tipped ETFs, like ETFs that keeps up with inflation. I'm definitely a big fan of that because I do think that inflation is, especially, we may take 20, I think it's going to lag a bit, but 2021, 2022, I definitely think you're going to see inflation starting to kick up.
Yeah, absolutely. Yeah. I feel like you're already seeing it. I go to the barber. It's now $4 more than what it used to be. I feel like restaurants are a little bit more expensive now as well, but they got to make up for lost time. Well, those prices are just going to be set. And that's how inflation works, and I feel like a lot of people don't understand that. Well, that's how inflation works. That's why you need to have your money in a investment in vehicle that's beating inflation. So that's why I'm so glad all of these people are downloading Robinhood. I don't care if it's Robinhood, M1 Finance, TD Ameritrade. If you have a broker, just start. Anyone who, even if they download Robinhood, you could still, it's legitimate. It's backed by the SEC. Like, you're making money. So I love when people try to bash on people who use Robinhood.
Yeah, I think it's a wonderful platform.
Yeah, the UI is super easy. It's super simple. It works. You just need to stick with the plan and know that there will be peaks and valleys. It will go up and down. And if they want to try to jump into something like swing trading, then as long as they educate themselves, right? So they should check out more of your videos so they can learn how to properly swing trade.
Well, I'm learning as I go too. But with swing trading, just know that the odds is nowhere near as far as profitability as the value. Long-term investing.
And it's all about stop losses on swing trading. You better have those stop losses. Anyone watching this video that doesn't know what a stop loss is, Google that right now.
The market is going to act with the presidential election, because I think that is when the market is speculating here. I guess for this current, but I think the presidential elections, I think that's when you're going to see the market take a stance, and it takes a more so correction. To me, that may be where I might increase my state a little bit more. I do think, though, if we do have a Democratic president, I'm interested to see how marijuana stocks end up doing, because they were talking about a whole bunch of legalizing marijuana. So that is, and I'm also curious to see how the healthcare industry end up doing, with the Democrats proposing the universal healthcare. I'm curious to see how those two markets play out.
So it's interesting because you're thinking more on a micro scale. Meanwhile, I always look on a macro scale with the presidential election.
Yeah.
So right now, the market's kind of choppy. I mean, it's still going up, which is insane. But I just can't wait to get over the presidential election, because as soon as the presidential election is over, no more uncertainty in the market, regardless of if it's Republican or Democrat that wins. Then there's no more uncertainty, and that's what the market likes. The market likes knowing what's going on. So as soon as the presidential election's over, regardless who wins, I think it will start to level out a little bit, and it won't be as hectic and crazy.
I think in 2021, what I think is going to end up happening is I think their returns is going to end up slowing down a bit. And I do think potentially retail would probably start to do a little bit better. But this is just my personal opinions. There's no hardcore evidence that I had back up. It was just my personal opinion. I don't know if you heard about they have the work from home ETF. I'll just be keeping an eye on how well that does, because that's one of the ETFs that's just recently came out, and I've looked.
What's the ticker symbol for that, so everyone knows?
I think it's WFH. Work from home. WFH. The thing that I like about it there is because normally with the top 10, 15 holdings, you normally see the same companies: Amazon, Microsoft, Google. But this particular index, they have the top holdings. Like all of these companies are new companies that I've seen.
Yep, there it is. Work from home.
Yeah, that all of those are like new companies, and I really don't know a lot about them. And to me, because I know I never heard of it, and I haven't heard a lot of other people talking about them that much, I'm definitely curious to see how they end up doing.
That's smart. I'll definitely have that on my watch list as well. I mean, I didn't even know about that ETF until now, and that's why I love where we'll never stop learning. You just keep on learning each day, each year. You just learn more and more. And I think that this video was really cool that we're able to do this because, you have your background, I have my background. But we know, we could learn from each other. You can even learn from someone that just started as well.
Right.
They pick up something and you're like, I didn't know that. And I've been investing for 3 years now. Oh, okay, cool.
Oh, I am curious before we, what is your take on with the whole cryptocurrency, especially with the feds or other currency end up printing a lot of, people starting to potentially lose trust in the dollar? And what do you think as far as cryptocurrency, as far as your take personally?
I think, and a lot of people don't understand blockchain technology. If they just watch, I'm no expert on it, right? We stick with stocks, right? You want to go to a crypto channel, go look up a crypto channel. But if you understand blockchain technology, it makes sense. And yeah, Bitcoin, I think as we're recording this, it's 11,000 now. It's creeping back up. And I think it will stabilize and it will continue to go up. People say, it'll be 100,000 one day, which I wouldn't be surprised if it does. I'm not saying it's the best investment, because I mean, I think, you know, I have some positions that are going up at a much quicker rate than what Bitcoin is going up with. But I think that these bigger fintech companies are going to start to implement them and use them more, and it will become a more legitimate form of currency. That may still take a decade, but I think it's completely legitimate. Definitely look into blockchain technology. Have you ever looked around blockchain technology and like tried to understand it?
So like I've tried my I understand it somewhat, not enough to make like a I guess a sound investment decision, but my take with cryptocurrency is I always give I want to say like at least 1 or 5% of what I consider speculative. So like cryptocurrency as of now, to me it's still a whole lot of unknown that I don't quite understand, but I definitely do see that a lot more people who are into it, they're starting to seem like to provide a little bit more data that's seem to be more convincing. So I right now kind of use cryptocurrency as a lottery play. Yeah, so like yeah, so it's a small position, but the way I look at it is like the upside could be huge. So if I'll have a small stake, so it'd probably be like maybe less than 1%.
I think that was really interesting that you brought that up, because I mean, a lot of these newer investors also want to get into crypto, and people are starting to see crypto's credibility.
Yeah, it's gaining credibility as time goes on.
Yeah, it skyrocketed back in 2017, and then crashed, and everyone thought that was the end. Right. But people said the same about the stock market in the .com bubble. It slowly came back, and that's what's happening with crypto. It's slowly coming back.
It's definitely getting its credibility. And that's all. Guys, once again, make sure you check out Keith's channel. It's called Think Stocks. I'll have it in the description below. Make sure you not only you hit the like button, you smash the like button on all his videos.
Smash that like button. Decimate it.
Yeah. Make sure you subscribe to his channel and watch all his other videos.